More diplomatic relations.
Well, there's a bigger picture to even that. Yeah, yes, I advocate a gas currency. Absolutely, I think that will be the global reserve currency of the future. If you were the
well, that's a remarkable statement because no one else is saying this.
Well,
now, you're a designer of exchanges. You're a former regulator. You're an insider.
Yeah.
And you think this is doable, and you think it's preferable.
It's completely doable. I mean, if you're the Chinese and you get the choice between units redeemable in payment for another piece of paper and units redeemable in payment for something that you use, like gas, what are you going to go for? I think the Chinese would fall over themselves. The Japanese would fall over themselves for, a gas currency as opposed to, more dollars.
Well, the Russians are going to love this idea.
It means that,
right?
yeah,
I mean,
absolutely.
they're a huge gas player. They're going to love this idea. Why is Russia buying so much gold? They're the biggest gold buyer in the world right now.
Well,
they say the fiat money system, and I paraphrase here, sucks.
Well, they're buying gold in preference to dollars, and I can't say I blame them. And the Iranians are being paid in gold, and I can't say I blame them either because what choice have they got?
So all these routes through gas, through oil, through gold, all of them suggest that the U.S. dollar as global reserve currency is heading to its endgame.
Yeah, but what's the alternative?
You're just talking about it.
But that's what I believe, but as you say, I'm the first one to say it, Max.
Right, but how close are we now to this? Because the debts that are based in dollars are not being paid, and whether it's austerity in the UK to promote growth or printing up food stamps in America to promote growth, neither is able to offset the liabilities of having so much debt. And we're heading into a debt or a bond collapse, bond bubble. Even the smartest money managers in the world now are shorting bonds as far as getting ready for this bond burst. So the dollar, whether it's politically managed away to something else or whether a collapse comes, we're heading to a post-dollar world.
I agree with that. There will be a post-dollar world, but I mean, don't forget there's two things. There's one is the dollar as currency, and there's the other, which is a dollar as unit of account, because you can exchange things by reference to the dollar, even if you don't settle in the dollar. And that's what I could see happening if as I point out, well, maybe a gas currency would work, maybe a gold currency would work. Many possible currencies, Max, and they depend upon people's accepting them, The basis of a currency is its acceptance by the user.
Yeah, but the thing with the dollar, as we saw in Iraq, is if Saddam Hussein wants to start trading oil in euros, he gets blown up. If Libya just starts talking about a pan-African currency backed by gold, then he ends up getting, murdered. In Afghanistan and around the region, and if Iran starts talking about oil and trading in something other than dollars, there's a sanction going on there.
I'm sorry, Max. I have to interject at that point and say, well, hang on a minute. It's not what you trade it in, it's what you do with the proceeds. That was the deal with the Saudis. The Saudis said, we'll price it in dollars and we'll use the dollars to actually buy bonds or whatever it is. But, if you trade in
but the credit facilities that go along with lending all this money to do development and to trade oil and gas and in the energy industry makes J.P. Morgan and Goldman Sachs and Wall Street fabulously wealthy. And that, the credit side of the business, not start extinguishing their bills of receipt, is what makes these guys wealthy. And they're backed by the Pentagon. They're backed by jets and bombs. They'll come into your country and blow you up.
I'm not arguing with that, Max. I'm just saying that, you can price in euros and in a millisecond you've got dollars, or you can price in dollars and in a millisecond you've got euros. What matters is not what you price in, but where the proceeds go. That's my point.
Okay, well, we disagree, because I would say what matters is your ability to float lots of credit and make a rent-seeking play on the global economy. That's what the American dollar imperium is all about.
I'm not disagreeing with that. I'm just saying that the unit of account and the unit of currency and borrowing are two different things.
All right, let's talk about Venezuela. It has recently devalued its currency by over 30%. Saudi Arabia has slashed oil production by 800,000 barrels a day. What's going on with these two oil producers? Does it have anything to do with declining energy imports into America? There's quite a lot going on in that question.
There is. Well, the Saudis have been shipping oil to the US, for instance, but in my view, that has to do with the if you like, prepay contracts that they were involved with. There's no reason other than predetermined contracts why the Saudi oil should have gone to the US. It would have been better off going east. Venezuela, well, I mean, they had a big refinery which they shut down, Hovensa, in the Virgin Islands. I mean, I don't want to get into all the refinery mechanics, but the essentially cheap oil, really cheap oil, in Canada and in the Bakken or the shale oil that's being produced. That is really cheap, can't be shipped out to the middle of the US. The refiners inland, Max, are making money like it's going out of fashion because they've got cheap oil, but the petrol is being priced as though it's coming from Brent. They're making out like bandits on that. But what happens is that the Venezuelans haven't been able to sell as much to the US as they used to, hence the Hovensa refiner shut. So they're getting into bed with the Chinese big time, but the Chinese don't pay
What
quite so
about
well.
the devaluation in Venezuela, though? Now you have like Colgate Palmolive that does business there. You just said we're going to lose $120 million. So this has ripple effects throughout the world, and people are devaluing now. This seems to be back in the fore. And what's the trend?
Well, I think the deal in Venezuela, Max, is that basically Chavez has been paying money big time, spending money big time. All of that oil wealth that's been coming in is being spent. It's not like the Norwegians who save it. It's not going into a sovereign wealth fund, it's being spent. Where does that go? It goes to inflation, it leads to devaluation, etc., etc. So that's where that's coming from, in my opinion. Also, they have the cheapest gasoline in the world. So what do? They waste it. Air quality, it's just like Tehran, let me tell you. It's just probably, except Tehran is about 3 times more expensive than Venezuela. But where that has to go, in my view, back to my point, they should put the prices up to the global price, compensate the population with gasoline currency, or basically carbon fuel currency, because that cannot inflate in price. That is backed by the intrinsic value of energy, Max.
All right, Chris Cook, thanks so much for being on the Keiser Report.
My pleasure, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank my guest, Chris Cook. If you'd like to contact us, you can email us at keiserreport@rttv.ru or tweet us, the Keiser Report. Until next time, Max Keiser saying, bye, y'all.